Hello class, and welcome to our today's lesson. In our today's lesson, we are going to talk about audit sampling. But first, before we discuss about audit sampling, we need to understand some terms which are commonly used in this particular chapter. Those terms include sampling first. In normal life, you will realize that some items might be too many to do a research in all of them. In some cases, if you want to do a research, it can also be very costly to do the research on all the items that you are doing the research on. And in some instances, it is practically impossible to do research on all the items that you intend to do the research on them. So it can be a case of actually like maybe the students. It might be so hard to understand maybe the feelings of all the students, but you can choose a few of the students and maybe get to know about their feelings towards something, and then from the few, then you can be able to tell maybe about the whole set of things. You can also have a case like, for example, in Kenya, we normally do the census once after every 10 years, whereby we count each and every person within the borders of Kenya. One thing you realize that it is very hard when that particular exercise is being undertaken. It's actually very hard to have 100% the citizen being censored, and also you find that it's also very costly to do such kind of thing. But now we can choose maybe a few of the items and then we do the sample. Look a case of maybe even the production. When you are producing the items in a factory, and then after producing those particular items, they are supposed to be subjected in the standard tests through maybe the KEBS. You will find that it is not practically possible to test each and every item that was produced. Let us have a case like salt, that is the table salt. You will find that the table salt, you cannot do the test to find out the proportion of the minerals that are in that particular salt and all that their combination. You will find that now you can take just a few which have undergone the same process, and then from the outcome of the few, we can generalize that outcome to be actually the case in all that particular lot that was produced in that particular period of time. So sampling, it involves the application of substantive or compliance procedures to less than 100 of the items. So in case maybe you had 100 items, that's what you intended to do the test on, you can simply choose 20 out of that 100, and the process of picking the 20 is actually what we call the sampling. So sampling involves the procedure of getting that portion which is actually less than the 100. The 20 out of the 100, that 20 is called a sample. So sampling is the procedure, but a sample is that portion of the total items. The total items, they are normally known as the population. So population refers to the entire set of data from which a sample is selected. If, for example, we had 100 items and then we pick 20, 20 is a sample and the whole 100 is actually the population. Then we have got what we call the sampling risk. A sampling risk is actually the risk that an auditor can do in testing and performing some tests on a sample which does not actually represent the population. If, for example, we pick 20 out of 100, and then from the 20 we do some tests, and then we come out with a conclusion from the 20, and we find that the response of the 20 or the results of the 20 is actually not the result of the 100, then there is a sampling risk. So it is a risk of picking a sample that does not actually represent the entire population. Then we have another term called the non-sampling risk, which arises from factors that make the auditor to reach an erroneous conclusion for any reason not related to the size of the sample. Then we have the tolerable error. Remember, you can make an error when you are doing a test of less than 100. So if an error is actually within the limits, you can think of a case whereby you can say, I'm going to make an error of maybe 1 to 20%. So the error which is between that range is actually known as the tolerable error. Then we have the confidence level, which refers to the degree of confidence that the auditor requires that the results of the sample are indicative of the actual error in the population. And then we also have stratification, which is a term which is actually the process of dividing the population into subpopulations so that items within each subpopulation are expected to have similar characteristics in certain aspects. Here I can say maybe under stratification is a case whereby we pick those items which are similar. Like for example, if we are talking about population of students, we can find a case whereby students can be maybe PhD students, we can have master students, you can have undergraduate students, diploma students, certificate students, and all that. So you'll find a case whereby if we get a sample of maybe 100 students, but within the 100 students, we have the postgraduate students, that is the PhD and MBA, we have the undergraduate, we have the diploma and the certificate like that. So if we pick out of the 100, we put the PhD aside, we put the masters aside, we put those who are doing undergraduate aside. That is the process we call stratification, putting those elements with similar characteristics together. After understanding the key terms which are used in audit sampling, we can go and here we shall see why auditors adopt a sampling approach. And when we say here why auditor adopt a sampling approach, we are trying to find out why does an auditor prefer sampling as opposed to doing a census. Remember, a census is a case whereby we undertake the test in the entire population. Whereas when we do sampling, we do the test in a portion of the population. So an auditor may choose to do sampling because of the following factors. Number one, it is the cost effectiveness. It is actually simple to do the sampling. Number two, it can be time factor. To complete doing a test in the entire population, it might take a lot of time, which the auditor does not have. Remember here, when we put this sampling and the population into the audit perspective, you can find a case whereby the business has got 1,000 debtors. And you want to confirm as an auditor whether the balances of these particular debtors as recorded in the books of accounts are correct. So you find if you do the entire population, then you need to confirm the 1,000 debtors. But you can choose to do a sampling and choose maybe 30 debtors. And then from the 30 debtors, if you find that all the 30 debtors that you have done the research and maybe you have found that the entries are correct, then you can simply sit down and generalize and say, then it means even the entire 1,000, they are also correct. But the moment you find that out of the 30, some are correct, some are not correct, then from there you can also make a conclusion. As long as that sample is picked in a very appropriate way to avoid the sampling error. Don't pick those particular debtors. Maybe the organization feels that they must do a proper records on them. Just do a sampling, and then from the random sampling, and you do your test, and then you can be able to come with a very conclusive results. Then we have the practicability. You can find that in some cases it is not possible to do 100% accuracy, or to have 100% accuracy. Materiality is important in auditing as well as in accounting, so you also need to do that. Then we have the psychological. A complete check would be more boresome. Remember, if you do today, there are 1,000 debtors. Today you do 100, another day you do 100. For 10 days you are doing the same thing. It becomes a bit boredom. But if you pick the 30 and then within maybe 3 years once you are done on them, then you find that the job can also be giving you the morale. Then fruitfulness. A complete check would not add much to the world of figures. So if a few are actually errors, then it simply means that some of them are errors and you don't have to do the entire check. So the objective of audit sampling here is to enable the auditor carry out procedures designed to obtain sufficient appropriate audit evidence to determine with reasonable confidence whether the financial statements are free of material misstatement. That is actually the key objective here. So the moment you have identified a few, then you can conclude that the accounting records are not free of errors, and then you can put that when you are doing your report. The use of sampling with properly thought out objective and properly constructed test allows more valid conclusion to be reached than when many transactions are done as possible. So you find those are kind of the reason why sampling is preferred as opposed to doing a census on the entire population. Having noted that, we can look at the steps or stages in audit sampling. Number one is the planning part. You need to plan on the sample. You need to know the size of the sample, the objective of actually doing that particular audit, the population from where you are getting the sample, the error that you are going to tolerate and the error that you are not going to tolerate, and such kind of things should be determined or should be planned before you do the audit sampling. Number two, determination of the sample size. Know the size of the sample that you are going to select. If the items are too many, then you need to have a larger sample. If the items are a bit few, then you can have a smaller sample. Then you need to have a consideration of the tolerable error or deviation. Also, you need to do an auditor's assessment of the inherent risk, and also assessment of control of the risk, expected error. All those should also be captured before you select a sample. Another thing you need to consider is the selecting of the items to be tested, which is another step. Then you select, and here in selecting you need to adopt some methods of picking a sample. We have the random sampling, whereby all the items are given the same chance of being selected. We have the systematic. Remember, random sampling is like rotary. You put maybe the numbers, you put each and every transaction and you indicate a number that represents it, and then you put maybe somewhere and then you pick a few and then they become a sample. Then we have the systematic, whereby we arrange the items and then we decide the third item. We count maybe 1, 2, 3, you pick 1, 2, 3, you pick 1, 2, 3. That is systematic. And then haphazard, whereby you select like without any order. Then the fourth step is to test the items. Test the items that you have selected. If they are debtors, you test them. If they are fixed assets, you test them, whether they are actually there and whether the figures recorded are correct. And evaluate the results will become next. You now determine whether the results that you have obtained are actually true and correct representative. Up to that point, I can say that is for part 1, as the notes that you have in the platform indicates. Go ahead and read those notes for clear understanding. Otherwise, thank you.